What's up, traders and investors? Wes, aka Norak, back again to teach you something. My goal in these videos is to educate you as the investor, trading skills that can help you make better investing decisions. I'm going to demystify it all. I'm going to try to make it very, very simple and approachable and useful. Today, we're going to talk about one of my key fundamental components, which is trading pullbacks to support and resistance. I'm going to demystify it all for you all. The concept is simple. If you look at a chart, you will oftentimes see where price goes up, it stops, and then turns around. We call that price reaching a resistance. Comes up, gets resisted from the top side, and then comes down off that level. And what we'll typically do is draw a line at that level so that we can notice it into the future. And then, if we're lucky and we're patient and we have done our homework to find these levels, price will oftentimes come back down to that level where it once held. It'll break above it, come back, boom, and that can be a level that we want to enter. Sounds simple enough, sounds a little hocus pocus to some, but we're going to look at some examples back in the past and in the present to show how this plays out again and again in stocks that you and everyone else may want to buy. Let's jump into the chart. We're looking at a trade right now that Carrie turned me on to, which is Kim Integrated Shipping Services. Now, I believe that he has a fundamental reason for this, and I'm going to look at this technically to see where I want to get in. There's two things that I combine in this type of analysis. Number one, I'm looking for the 50% retracement. And I've talked about this in my videos before. If we take a low from the July the 27th up to the high of March 17th, we get the trend, the broader trend that I want to look for a pullback. And that pullback level happened to be today at 62.47. Now, you may say there's a lot of different little trends in here. How do we know which one to identify? Well, that's why I'm making today's video to help sort that out. You'll notice that I have arrows. I have an arrow right here at the September the 21st high that it made about 62, let's call it 27. And then there was a swing low right here on February the 24th when Russia invaded Ukraine. These two levels, if you look at them, they sort of create a little inflection point where price came up and held it here and hesitated. In fact, it actually held below it a couple of times, three times to be exact. And then once it broke above it, it came back, held it again, and up it launched into the next trend. Now it's back there again, which matches with our 50% retracement level. This is what I like to see. This confluence of two fundamental chart elements. This is where I like to enter on pullbacks. So, this is a live example right now. Let's go back in time and look at some others and some that are present as well. So, one that I want to look at that happened, and I've talked about this in a video before, we'll just recap it, is Tesla. Now, Tesla offered a really nice short term swing trading opportunity when it pulled back in December of 2021. What that was the 50% retracement of the trend from May of 2021 up until November of 2021. But there's one more really cool thing that it also was. That was also matching up with the January 2021 all-time high. That's a thing of beauty. That is a thing of beauty. I was able to catch it at this level. I mean, you really want to have these things match up. That can be a very, very powerful, high probability level to get into something. And like I said, this was a swing trade because, as we know, Tesla's been pretty volatile, but you could have taken that back up for a retest up to 1200. So that's an example of a Tesla swing trade. Costco is another stock that I really like. Let's look at this chart. Let's go back a little bit in time. So around 2021, Costco began to stall out. It made an all-time high in September of 2021 of 470.49. Okay. Now, what we need to happen is we need for price to break from that level. And once it's broken, well, there it goes. And I think a lot of people they get this thing called FOMO, fear of missing out. The reason like to wait for pullbacks is because I am human. I suffer from emotions as well. And part of being a successful trader and investor is taking those emotions out. Now, we're going to talk about breakouts here in some future videos, but let's stick with pullbacks right now. Let's be a patient investor and let's not give in to fear of missing out. Let's not give in to FOMO. And let's just have that level marked off and have an alert set either on TradingView or Seeking Alpha or whatever platform you want to set it. And let's wait until it comes back to that level. We may have to wait a while. Remember that with stocks. But again, we're long term investors here. So we're willing to be patient. And sure enough, in January of this year, 2021, it pulled back to this level. Now, how do you identify these levels? Because sometimes they can be less obvious than others. That comes with experience. But what you really want to look for is a clear level where price got up to, in this case, it did it twice, held, and that's going to be your level that you look for. It's going to take some practice, but that's why I like to assign homework as a teacher. And we're going to talk about that at the end. And then, of course, breaks above it, pulls back to it. And that was a great level to get into Costco. It is that past all-time high, which is key. If you want to really simplify things down, look for past all-time highs, maybe in years prior. In fact, let's do a little case study of Apple. So Apple has been going up, 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 up. Okay. Let's go back a little bit in time before Apple's been going on this meteoric rise. Well, I want to go back to the aughts, the oohs. Okay. So I've already pre-marked these out so that we can save time making this video. But let's take a look right here. So there was an all-time high in 2006. Okay. We also had a high that came up here starting the year January '07. But basically, throughout '07, Apple went on a rise in price, a rip, as we call it, rise in price. And again, people could have FOMOed in, but you never quite know when you're going to get that black swan event. I know a lot of people have been talking about it, thinking that we're going to go into a recession here. Maybe we only get one every 10 years, so we'll see. But if you would have just been patient, believe it or not, the '08 crash, the '08 dip brought us back all the way down to those 2006 levels. Brought it all the way down. And notice I've also got the all-time high before it crashed down here. There's where it hesitated. As an investor, you would have been patient, but you would have been better off buying it down at those levels once it came back. Now, you're cheating because we've already looked to see that this all-time high, 2006, that's obviously going to be significant. Price hesitates, and then finally breaks out from that level once again. And then look at that right there. These are things of beauty. May the 6th, 2010, ping, little ping of the price right there. What was that? That was the all-time high from 2007. These happen infrequently. I love to see them. They get me really excited. But look for these. You can see these happen all the time. And plus when you set these alerts, that makes you diligent and set up good habits to look for these kind of opportunities instead of jumping in when you may be chasing the momentum. And so that was an Apple example. Let's go back way back in time to Amazon. And when I say way back in time, I mean let's go back to the early days of Amazon. You remember the dot com bubble? I don't. I'm too young. But Amazon made a high and then precipitously fell off almost 95%. Wow. Wow. I guess no one knew that a book selling website was going to take over the world. But if we go forward and we look, what price did at this level, 113, it broke above it in October of 2009. Wow. It took a decade. Yeah, wow, a decade to recover. But once it did, even though it broke above it, it came back to retest that level, retest of the support. And from that point on, well, the rest, the next decade is pretty much history. All from that level. I mean, these patterns right here are really, really key. This keeps me from jumping into things because I see this so often over the years I've been doing this that whenever I see price shoot up above one of these levels I have marked, I don't go rushing in. I wait for a pullback to that level. There's one that I posted on the Best of Us Investors Discord in the Norok Trades chat a few weeks ago, which was Coca-Cola. Coca-Cola is just such an example. Again, bringing together my fundamental concepts. Coca-Cola was coming down off of making a high in March. Wow. I guess people still want to drink sugar water, even though World War III was imminent. And the key here was these levels it made in July, the summer, yeah, July to August of 2021, matching up with a 50% retracement level from the low of December up to the all-time high of March. We got a ping of that level. I made a trading view idea. I posted in the Discord for people. This is my bread and butter setup. This is how I like to buy everything: stocks, crypto, even futures. These, if you can just be patient for these two things to match up, you look for these major supports and resistances to match with 50% retracement levels. Wow, you can really increase your probability tremendously. Look, not everything is going to work out. Yes, I've shown you times that it did to really try to put it into your head, help you with this pattern recognition, because that's what you're doing as a chartist. That's what I consider myself. I'm a trader, I'm also an investor, but the key of trading, especially chart patterns, is recognizing them, training your brain. Just like you look outside and you see some clouds and you think it's going to rain, I look at price coming back to a support or resistance level, matching with the 50%, and I think reverse. That's what I think. And that helps me get into good, high probability setups with very low drawdown. I know everyone hates drawdown. I don't think anyone hates it more than me. This is how I have avoided this for myself, is waiting for these types of setups. So again, as a teacher, I'm giving you homework. I want you to go through the stocks that you like, the stocks that you want to buy, or even the stocks that you already own, and find these major levels of inflection where price comes up and turns around, or as the case may be, makes a dip. Find these levels. Go on TradingView, go on whatever. TradingView is great. TradingView is the way to do it. But whatever platform that you're doing it on, go and draw levels and look back in time. Study these levels and you too are going to find out how powerful they can be for finding and informing good trading decisions. So trade wisely, and we'll see you all in the next video.